Thank you very much for that analysis. Karthik Srinivasan, Group Head of Financial Sector Ratings at ICRA, now joins it. Karthik, if you just hear the numbers that my colleague Abhishek had put out, it doesn't align with the kind of fall that we're seeing in the banking stocks today. The index itself is down close to about 1,500 points. What have you made of the mayhem?
Yes, good afternoon, everyone. As a rating analyst, it becomes difficult for us to comment on volatility in the stock market side. But given that financials have a fair representation on the index, both are really interlinked. From our point, what we are seeing is the financial health of banks have definitely improved over the last couple of years, and they are in a much better position today as, let's say, 2 or 3 years back.
Sure. Karthik, I know, you can't be speaking about individual accounts or individual corporates, but I think within the constraints that you have, if you could give us some sense, the concern right now is that, if there is any issue, any outstanding litigation also that starts, whether lenders to the Adani Group will be impacted in any which way whatsoever. Do you think that there is at all a concentration risk, or is the debt very widely held across PSU and private that it shouldn't really become a bit of a hiccup for the financial sector?
And at this point in time, we really don't have the entire breakup of where the debts are held. As you just articulated, a couple of equity houses have made some analysis of the same. But coming back at a sectoral level, the last couple of years, the overall asset quality pain for the system is down significantly. The capital profile has also improved. Most of the banks are significantly above the regulatory minimum requirements on CET. Forget the overall capital adequacy, even on CET levels, they are very well placed. And more importantly, we've also seen a sharp rebound in terms of operating and profitability of banks. So to that extent, banks should be in a position to withstand any shocks out here. And again, a lot of debt would definitely be secured by operating cash flows or other assets. So net, at least at this point in time, we don't see any material shock to the banking sector, at least as of now.
All right, that's good to hear, Karthik. Thank you very much for joining us. Quick comments there on banks and their ability to withstand any potential shocks. We'll come back on banks more. Stocks, by the way, banks at least are, I'm looking at ICICI Bank, for example, pretty much, kissing the lows of the day, sorry, beg your pardon. The low is, 816 or so, and we're there at about 816 point something. And I think similar is the case with a bunch of other large banks as well. 360 points on the Nifty. There's a 30-40 point move, which has appeared from the lows on the Nifty, but not beyond. How should you position yourself now in the remaining, 45 minutes or so of trade? Mitesh is with us. Mitesh, coming to you late today, but your reading of the screen, it's